Hello. The U.S. 10-year Treasury note hit the 4.8% level today, following the stronger-than-expected economic data released earlier this week, which showed that the economy remains robust despite high borrowing costs, providing more evidence for the higher-for-longer expectations. The bond sell-off was not contained within the U.S., as the Germany 10-year bond yield, the European benchmark, hit 3%, while Japan's 10-year bond yield reached 0.8% despite the country's short-term negative interest rate. The bond yield surge is putting pressure on the global stock markets, which can be seen especially in the technology sector. The tech-heavy Nasdaq index fell 1.87% during yesterday's session, and the Nasdaq stock futures are also pointing slightly down today. Adding fuel to the fire was a downgrade to Apple shares, justified by its high valuation, expected sales challenges, and the argument that the company's international growth anticipation is overly optimistic. Oil prices undergo choppy trading today ahead of the panel meeting of the OPEC Plus ministers. The OPEC Plus is expected to keep output policy unchanged, deeming Saudi Arabia and Russia's output cuts to be sufficient for combating higher interest rates and a stronger dollar. In the figures supplied by the American Petroleum Institute yesterday, crude oil stocks fell by 4.21 million barrels in the week that ended September 29th, while analysts had been expecting a decline of 92,000 barrels. Despite the drop, oil prices have slipped nearly 2% as of 7 a.m. Eastern Time. Intel announced yesterday its plans to operate its programmable chip unit as a standalone business starting January 2024 and hold a public offering for it over the next 2 or 3 years. Intel had acquired the business back in 2015 when it bought Altera for $16.7 billion. The move would allow Intel to focus on core competencies while potentially creating more value for investors. As Phillip Capital Team, we wish you happy and healthy days.